since this is after all a Capital Mind episode, everyone wants to know something about money. So if you had to advise someone today, and maybe we can't use the word advice, but if you had to opine on someone who had 100, 1 lakh or 10 lakh rupees today, about, look, I really care about financial independence and maybe retiring early. How do I deploy this today? What would be your somewhat specific recommendations, to the extent you're comfortable talking about them? I mean, maybe don't name a stock, ideally, but other than that, how would you advise this? Whoever wants to take this first.
No, for me, I'm completely opposite to what Deepak is. So I would say that, I mean, I've mentioned a lot of these points during our conversation. Extremely important to be disciplined.
Okay.
Don't need to be rash in the market. I think asset allocation is very important, and even within asset allocation, follow a kind of core and satellite kind of an approach where your core becomes a very simple strategy which you can kind of mix your equity, debt and gold. Your satellite portion of your portfolio can be alternatives, which could be an active fund or could be an alternative asset that you look at, but keep a discipline in your portfolio. And only play around with a certain portion of your portfolio once you do that. So for example, if I had 100 rupees, I'd say that, look, 75 rupees is something I'm not going to touch with. That's going to be broken up into asset allocation, and that split could be, as I said earlier, a 50 equity, 25 debt, and a 25 commodity kind of a thing. And the rest 25 rupees is something that I can play around with. Maybe look at sectors which I believe are going to outperform, or maybe look at some asset class which is going to outperform, or pick up an active fund manager or a PMS or something like that, in that portfolio where I believe that that particular asset class may kind of add to the returns of my core portfolio, right? Have that discipline and maintain that discipline, for a long period of time, and I'm sure the FI part won't be too far away for people, yeah.
If 16% CAGR is even remotely possible, I think FI will not be a problem for anyone. So I would agree. Yes. Deepak, how about you? Please don't say Bitcoin.
No, I will. That's a very important. I have a different opinion on this. Maybe I'm going to give what is called global gyan nowadays, which is the smaller your corpus is, the returns matter to you, or the asset allocation start to matter to you once your corpus becomes roughly 3 times your annual income or expenses. So basically, if you're earning a lakh a month, then you need to be 36 lakhs in corpus before the returns become meaningful enough to you for you to bother about, a 1% difference in return is going to be meaningful. Up till that point, according to me, even an FD is fine, and even gold or a larger allocation to something that you don't consider optimal is also fine. But once you get to that point, you have to start. I think Vishal's given a great sequence of optimizations where you can say, okay, I'll start with the passives, and I may be a passive person throughout, and I could then blend downwards into, I'll put a little bit of allocation to something else, which is a different way to look at it. But I think these things start to make sense once your corpus becomes slightly bigger. For the early part of career, and I tell this to a lot of people, we are asset managers. Ignore us, because your biggest return is going to be you. So if that money can better spend taking a course which gives you a degree which can improve your life, or learning a new skill within your job or outside of your job that can get you a better return, the salary increments that you might be able to get just on that is greater than the returns that you will get from any investment that you make with that money. So if I can get a 1 lakh rupee per month job today, and that I can take another skill that gives me a 1,50,000 rupees per month, then spending that 10 lakhs on that skill might pay for itself in much faster terms than the other way around. So I'm saying that just the 50,000 rupees extra per month is 6 lakhs rupees a year. Imagine 10 lakh rupees spent to get 6 lakhs extra a year would be 60% return on capital, right? So it's always like you invest in yourself, it's better. The next set would be invest in a business that you control, because it may be something that so this is me coming from, I've done the maddest things. I didn't have any money and I invested whatever little I had into a business that I started, and it made me a reasonable amount of money in the end of at that time. But it was a miserably difficult experience, because I went through phases where I couldn't spend as much as my friends could, and then I came to a phase where I could spend a lot more than my friends could. But I could control the business. That's why it's different. Because when you can control a business, you can have 90% of your wealth in that business, and that's fine. But once you get into other people's businesses, then you should definitely look at the approach that that Vishal mentioned, which is diversify, build yourself a thought process around allocation, and then do it. This is a sequence of events that I'll say everybody should go through. But usually people have already set in their lives, so there's not that much improvement to be made. This is the people who are 35, 30 plus and all that stuff. For people who are younger, the money actually makes sense doing things that will help you traverse a future career path that may be significantly higher return than anything else by just doing an incremental course, a learning, a travel. I mean, how many of us would at a job say, listen, there's this fantastic conference and my company will not allow me to go for it because I'm not high enough or whatever, but I'll pay my way and I'll take a holiday from my company. I'll go and attend this conference and I'll come back and I'm going to meet the right kind of people over there. It's very difficult to find people who will actually do this, because the minute they apply and say the company says, no, sorry, you don't qualify to attend this conference, you're like, okay, it's over, bye bye. It's, that's the end. But I think that may be a better investment of the money that you have than sometimes doing it at a younger age. It will change as your corpus grows, because incremental earnings won't come so much. So that's just more global, because in the end I'm telling you to invest in yourself, build yourself better, do some 10 push-ups instead of 5. But maybe sometimes 10 push-ups make sense.